Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here again. Well, time's pretty much fly, so today is Christmas Eve, the Tuesday, the 24th of December 2024. So very good morning to all. So before we jump straight into today's Daily Dose of Market Insights, which will be a rather quite quiet one or a short one due to the holiday season now in the market. So let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so yes, so as usual, before we jump straight into the short-term intraday technical outlook, let's have a recap what has taken shape yesterday in terms of the intraday performance of the broad-based cross asset classes, and as well as any related important news flow that should be paying attention to. And thereafter, today will be a bit special because as we come into the real end of 2024, I will have a quick recap what has taken shape in terms of the performance of the various key cross asset classes. And lastly, I will cover, as usual, the short-term intraday technical outlook and the key levels to watch out for on the various broad-based cross asset classes, ranging from the major dollar pair, the major stock indices, and as well as the two key commodity markets that we do on a daily basis, gold XAU/USD, and as well as the West Texas crude oil. So let's start with the key news flow and economic data released yesterday. Right, so yesterday was a rather quiet session. All right, so in terms of the economic calendar, let's start with Canada, because for those who are interested in Canada, so Canada over here is that the preliminary monthly GDP for November actually inched down lower. It actually contracted negative 0.1%, and the PPI, but the PPI actually went up. All right, PPI went up. So PPI on a year-on-year basis for November actually increased to 2.2%. So that was actually a rather mixed data for Canada, and we saw the Canada dollar traded sideways yesterday. And over in the US session over here, what we'll see over here is that the consumer confidence data, that's for the conference board, actually inched down much lower than expected. Market is expecting 113 increase, but it inched down to 104.7. All right, 104.7 over here. But nevertheless, this particular lackluster consumer confidence data from conference board did not derail the positive momentum in the US stock market. So still bearing in mind that yesterday we flipped to a intraday bullish bias for the Nasdaq 100 and the US Wall Street 30, i.e. the Dow Jones Industrial Average, because the short-term technical factors of these two indexes start to turn positive, which it plays out as expected yesterday, where all the major stock indices, except for the Russell 2000, which closed down negative 0.22%, managed to inch up higher. So that is actually being led by the mega cap stocks, primarily in the technology field, that is been leading in the US stock market yesterday, and as well as in the entire year of 2024. So the Dow Jones Industrial Average added 0.16%. Why it underperformed? Because it doesn't have heavily weightage in the mega cap technology stock as compared to the Nasdaq and the SPX 500. So the Nasdaq outperformed by 1%, the SPX 0.7%. And this is pretty much clear if you look at the heat map of the S&P 500. So what we could see a series of deep green in the mega cap technology stocks. All right, where NVIDIA is almost 4%, positive 3.69%, followed by Google 1.68% and Meta 2.5%. All right, and nevertheless, Tesla as well is also considered one of the mega cap stocks, inching up higher to fresh all-time high due to Elon Musk's close relationship with the incoming Trump's administration. Okay, and the US stock market. If you look at the main FX market, pardon me. So over here at the FX market, all right, why is this not showing? Oops, what's going on? Okay, sorry about that. I think it's just hang on. Okay, okay, give me a minute. Let me see. Hopefully everything is back on the charts itself. Okay, everything is good. Okay, let me reload that particular rolling performance chart of the FX market. Okay, this is the one. Okay, so this should be 24th of December. Just take it. Let me change the setting. Okay, 5 day. So if we look at yesterday's performance over here, okay, it push up, then thereafter it just traded sideways. So what you could see over here is that the FX market on an intraday basis starts to go sideways. So that's pretty much natural because liquidity will be lesser as a majority of the short-term speculators are more or less has really closed their books. I mean, and as well as in terms of flows wise, it should be get thinner as well as we head into the holiday season this week and heading into next week. So it's going to be rather a sideways price action movement for the FX market. So later I'll touch on the key levels to watch over here. So as for gold price also nevertheless it inched down lower slightly yesterday, negative 0.4%, and the WTI crude oil price traded sideways as well. Okay, but still managed to inch down on the lower part of the sideways range. Later I'll touch on more on the short-term technical on the West Texas crude oil. So for today, I want to cover more about a review of the year in terms of the cross asset classes performance. All right, so what you can see on my screen over here is the 3-year cross asset performance as of 9 December. So I did this on the 9th of December. So this shouldn't change much given after even after X post FOMC. So what you could see over here is that the top part will be the major stock indices globally: SPX, Nasdaq, Dow Jones, Russell, Nikkei, Hang Seng Tech, China CSI 300, ASX 200, Straits Times Index, German DAX, as well as the UK FTSE 100. So I could see over here is that this is a calendar year 2022 2023, then thereafter this will be Q1 2024, Q2 2024, Q3 2024, and this Q4 2024 right now is as of 9 December. So we know that we haven't reached the end of the year yet, which is 31st of December, which is next week. So based on whatever data as of 9 of December, the US major stock indices, especially the SPX and the Nasdaq 100, is going to be having a double digit gain of 20% each, all right, especially on the SPX. All right, so SPX last year was 24%. This year looking at around 26 or 27% thereabout. All right, so for Nasdaq 100 last year was 54%. This year looking at 27%. So back to back year to year stellar gains. All right, over here. So primary for sure is if you look at all the major US stock indices, okay, at this point in time, even though the Russell 2000 managed to inch out 18%, but now we should be lesser, and the Dow Jones Industrial Average 70, also 18%, there about 70.8%, but the top performer still remains on the Nasdaq 100 and SPX, driven by the heavily weightage in the mega cap stocks over here. And not too bad over here for the Hang Seng Index. So the Hang Seng Index also managed to record gains this year. So despite the last 1 or 2 months, we start to see lackluster return, especially in Q4, where they are in the red together with the China CSI 300 over here. But currently, the year-to-date return, means calendar year-to-date return as of 9 December, still managed to be to actually be in the green, all right, of around average about 20% each for the Hang Seng and Hang Seng Tech. The CSI 300 over here is about 15 or 16% each. So the bulk of it actually come from Q3, where there was this fiscal stimulus optimism. So what we could see over here is that in the last 2 years, all these are in the red. So something to look out for as we head into Q1 2025 next year, whether will these promises of forceful fiscal stimulus out from China top policymaker materialize in the first quarter of 25, because that is pretty much needed because market participants in Q4 is getting very lackluster, very lethargic about whatever promise that the top policymaker make. But until now, we cannot have a firm amount on how they're going to implement it and where this so-called promised fiscal stimulus will be allocated. All right, until that gets more clarity over here, then we could see this positive gain from Q3 floating back into Q1 next year. All right, so Straits Times Index also not bad. Our STI index managed to gain over here, Straits Times Index. So it managed to gain by 17% as well. So it was also a laggard over here. Okay, the Straits Times Index, okay, managing to actually inch out in Q3 and Q4. Okay, the return coming in Q3 and Q4. And I want to highlight over here is this particular commodities. Oh, sorry, the commodities market. So this commodity market over here, there's this ETF called Invesco DB Commodity Index. So this commodity index is primarily heavily weighted by oil. Oil has a huge weightage of it. So it's actually across the group, all the commodities prices, all types of commodity, including precious metals like silver, gold, energy will be oil, and as well as industrial metals and soft commodity like grain, coffee, whatsoever. So if you look at the commodity index over here, which is heavily weighted by oil, is lackluster. It's only almost unchanged, 0.36%, because the West Texas crude oil so far is down negative 4.61% as of 9th of December. But what's interesting over here is that within the subsector of the commodity index, there is one called agriculture index. All right, so also by the same fund ETF manager, Invesco DB Agriculture Index. So this particular agriculture index over here managed to have a whopping gain of 31%. So that actually surpassed the Nasdaq 100 and the S&P 500. So what it means that over here is that agriculture prices, which is part of the commodity space, is not showing signs of deflation because this is due to climate change, seasonality that push up orange juice prices and as well as coffee prices. So if this trend continue to persist in 2025, its agriculture commodity prices on the upswing, that could also potentially see some form of cost push inflation feeding into the global economy. And on top of Trump's policy that is also highly inflationary resurgence in nature, potentially that could actually also lead to the US Federal Reserve to be less dovish in 2025, which they already have expressed such a view in last week dot plot release, the latest dot plot release on their last Wednesday FOMC meeting, and as well as ex-post FOMC Fed Chair press conference as well. And for sure, Bitcoin itself is the top performer among the cross asset classes year to date as of 9th of December, up by 133% due to this incoming Trump administration policy that tends to be more favored towards digital asset. And not too bad for the silver metal, the yellow metal, pardon me, not the silver metal, yellow metal, gold, XAU/USD continues to show signs of similar return to the Nasdaq 100 and the SPX, pardon me, the S&P 500, gaining of 28% or 29% as of 9th of December. All right, so this is the kind of a review on the 3-year cross asset class performance as of 9th of December that I'll share with you, something like a year in review, all right, for today's daily dose of market insights. All right, so with that, now let me expand my screen and jump straight into the short-term intraday technical outlook, okay, on the various broad-based cross asset classes. All right, so starting with the FX market first. All right, so now let's start with the euro dollar. So euro dollar yesterday traded sideways. All right, so what we could see over here, this is the euro dollar. So early morning during the Asia session, it hit a high, then thereafter it come down but managed to held at the short-term pivotal support level at 1.0380. So I will still use this 1.0380 as my short-term pivotal support level to maintain this intraday bullish bias on the euro dollar. First resistance level to watch will be 1.0460. Only a breakout above 1.0460 will expose the next near-term resistance at 1.0516, 1.0540 next. So this is so close to the 20-day moving average. So whatever rebound that we see so far on the euro dollar, in my opinion, is still going to be very kind of a mean reversion rebound within its short to medium term downtrend phase that is still intact on the euro dollar. All right, so only an hourly close below 1.0380 will invalidate today's very bullish buy. Okay, I repeat again. Excuse me, a bit of cough. Okay, only an hourly close below 1.0380 will invalidate today's intraday bullish bias on the euro dollar to allow the impulsive downward sequence to resume, hitting lower lows, exposing the new near-term support level to watch will be at 1.033, followed by 1.29 figure next. All right, so that's for the euro dollar. Turning our attention will be the sterling dollar. So the sterling dollar yesterday also came down, managed to survive at our short-term pivotal support level, 1.2520/1.2505, a bit of excess. So still using this short-term pivotal support to maintain that intraday bullish bias for the bounce, for the minor mean reversion rebounds scenario. First resistance level to watch will be 1.26 figure. Only a breakout above 1.26 figure exposes 1.2675 next. All right. However, if price action starts to break down below 1.2505, then today's intraday bullish bias will be invalidated to see it sliding downwards lower towards 1.2460/1.2450. Then thereafter followed by 1.24 figure level. Okay, so this 1.24 figure level, right, is this congestion area over here. Okay, during April 2024 this year. All right, that's for the sterling dollar. Now, turning our attention will be the Asia Pacific currency against the dollar. So starting with the Aussie dollar. So the Aussie dollar continues to trade sideways above our first support level at 62.30 thereabout. So still no change, still using that 62 figure level as my short-term pivotal support level, maintaining that intraday bullish bias for that mean reversion rebound potentially to continue. But first resistance it got to look out for today will be at 62.85/63 figure level. Only a breakout above 63 figure level exposes 63.30. However, if price action starts to tumble down and have an hourly close below 62 figure level, then we got to respect the impulsive down move sequence that potentially resurgence of the impulsive down move sequence to expose lower low towards the next near-term support level in first step at 61.60, followed by 61.20 next. So that's for the Aussie dollar. Now dollar yen. So dollar yen now yesterday is now it did a bounce, but the bounce managed to store at our short-term pivotal resistance level that we highlighted yesterday as well, 157.35. So we'll be using this 157.35 to maintain that intraday bearish bias. First support level to watch out for the dollar yen will be 155.85 on the intraday basis. Only a breakdown below 155.85 exposes a new minor lower low for the next near-term support level to come in at 154.30. However, an hourly close and a breakout above 157.35, pardon me, and an hourly close and a breakout above 157.35 short-term pivotal resistance will invalidate today's intraday bearish bias to kickstart another round of impulsive up move sequence, targeting the next near-term resistance zone at 158.35/158.80. Above it sees 159.45 coming in next over here. So what's 159.45? So 159.45, I repeat, over here is the minor swing high area of 12th of July. Okay, so that's for the dollar yen, and as well as summing up the intraday technical outlook for the major FX dollar pair. Now, turning our focus now will be the the major stock indices, starting from the Hong Kong 33. So Hong Kong 33, we do have a bullish momentum breakout for today. So yesterday we have that 19,960 short-term pivotal resistance level. looking for a retest of 19,610, but unfortunately this didn't happen, and price action starts to shape a bullish breakout above this resistance level that has been resisted since 17th of December, and now is also breaking up above the 50-day moving average. So it's more like a momentum breakout over here. So far in the news flow, I don't see any particular interesting fundamental data or news flow that show this breakout. So it's more like fundamental, more that position driven and momentum driven. So I got to respect this positive momentum on the Hong Kong 33 right now over here. Okay, this is the 1 hour chart, Hong Kong 33. So with that, first support level to watch will be 19,960. The pivotal support level will be 19,610. I don't put it so tight over here, like around the 20-day moving average. Okay, so that's a 20-day moving average here, which is at 19,790. So the first support level to watch is a zone of 19,960 slash 19,790, but pivotal support be 19,610. So using 19,610 and my short-term pivotal support level on the Hong Kong 33, i.e. the Hang Seng Index, we respect the positive momentum, flip to a intraday bullish bias. Next two resistance level to watch on the intraday basis, 20,300, 20,520, a push up above 20,520, potentially revisit the 10th of December minor swing high at 21,350. Next, only a breakdown below 19,610, potentially reinsert the bearish pressure on the Hong Kong 33, at least on a short-term basis, exposing the next near-term support level at 19,337, followed by 19,030 next. So that's for the Hong Kong 33, flipping to a intraday bullish bias using 19,610 as my short-term pivotal support level. Now, Nikkei 225 or Japan 225, pretty much boring. Still no change. Still trapped within this neutrality stance that we have yesterday. Yesterday, prop can't break above 39,480 level, which is the upper limit of the neutrality range. So still keeping a neutrality stance for the Nikkei 225, i.e. the Japan 225, between 39,230 slash 39,480. Lower limit of the neutrality range will be at 38,315. Right. Now, German 30. So the German 30 or the German DAX continues to be rather positive, shaping higher low right above our short-term pivotal support that we highlighted yesterday, where we flipped to a intraday bullish bias. So still no change using 19,690 slash 19,590 short-term pivotal support, which will correspond to the 50-day moving average, I think, as a support level as well. Maintain that intraday bullish bias on the German 30. First resistance you got to surpass will be at 19,960 for today. Above 19,960 exposes the next near-term resistance level at 20,105, 20,190 next. Okay, let me put it in writing. 1,960. Okay, only a push down and the hourly close below 19,590 will invalidate today's intraday bullish bias to see a further slide, exposing the next near-term support level at 19,445, followed by 19,155 next, all right, which is the minor swing low area of 27th of November. So that's for the German 30, still maintaining that intraday bullish bias using 19,690 slash 19,590 as my short-term pivotal support level. Now, turning our attention will be the major US stock indices, starting with the Dow Jones Industrial Average or the US Wall Street 30. So the US Wall Street 30 pullback and bounce right exactly at our short-term pivotal support level, a bit of whipsaw over here, a bit of excess. Okay, so we're going to just tolerate about this excess here. Okay, 42,630. Okay, let me okay, so Numa just put, because it seems to be hang right now. Okay, so what I'm going to do over here is this is still this. Let me change it. Okay, it seems to me that I got hang. So let me say it verbally, 42,760 slash 42,630 short-term pivotal support level. Yesterday it came down, did a bit of whipsaw and shaped that V-shaped recovery. So still maintaining our short-term intraday bullish bias on the US Wall Street 30 as it shaped a higher low. First resistance it got to surpass will be at 43,325. Only a breakout above it, 43,325 exposes 43,720. All right, and also bearing in mind that over here is that today is Christmas Eve, so the all the major US stock indices will be operate, I would say, on a half-day basis for today. All right, so no full-day trading session on the major US stock indices. So just bear that in mind over here because of lower liquidity for today as well. Okay, it seems to me that I can't change this. I don't know why it's so slow. So just say it verbally again. 42,760 excess for the 42,000. Okay, finally it shows up. 630. Okay, 42,760 slash 42,630 short-term pivotal support level. First resistance you got to surpass will be 43,325. Above it sees 43,720. Only a breakdown of hourly close below 42,630 will invalidate today's intraday bullish bias to expose last Friday minor swing low at 42,210 and even the next near-term support level at 41,840 slash 41,590. This will be a very major support zone for the US Wall Street 30. Why? Because if we go back to the daily chart, that particular support zone confluence, the 41,840 slash 41,590 confluence with the lower limit of this major ascending channel that is still in place almost a year ago from the low of 30th of October 2023. Right, so that's for the US Wall Street 30, i.e. Dow Jones Industrial Average. Nasdaq 100 managed to survive at the 20-day moving average, came down and shaped a bounce, but can't surpass our first resistance at 21,600. So still no change. I don't put it so tight because I haven't break above 21,600. Still using yesterday's pivotal support level at 21,180 to maintain our intraday bullish bias. Okay, as long as 21,180 short-term pivotal support holds, maintain our intraday bullish bias. A breakout above 21,600 exposes the next near-term resistance at 21,890. Only an hourly close below 21,180 will invalidate today's intraday bullish bias to see it floating down to revisit the 50-day moving average, confluencing with the next near-term graphical support zone at 21,780 slash 21,630. Right, so that also sum up the intraday technical outlook on the major stock indices. Now turning our attention will be the commodities market, starting from gold. So gold started to trade in the sideways range. So yesterday it hit our first resistance, come break out and floated downwards and traded close to our first support level at 2,606. So do expect this kind of price movement to take shape again. Over here, if you look at the hourly RSI, so managed to actually shape a series of lower high as well over here. All right. Okay, this high, lower the high, lower high. Excuse me, or bad cough. So still using, since it can't break below 2,606, so I'll be using 2,650 as my short-term pivotal resistance level, which corresponds very closely to the 20-day moving average as well. Below 2,606 exposes the minor range support level of 2,587, 2,577. So it seems to be in this kind of range configuration over here. All right, so only a push up and an hourly close above 2,650 will invalidate today's intraday bearish bias to see a recovery scenario within its range, exposing the next near-term resistance at 2,674. Above it sees the range resistance or the range upper limit of resistance at 2,728. So that's for gold XAU slash USD, still using the 2,650 as my short-term pivotal resistance level, maintaining that intraday bearish bias within this sideways range configuration for gold. Now, the West Texas crude oil also continues to trade within its range configuration. Over here is range, but still can't convincingly break above the 50-day moving average that is downward sloping. So still no change at equal to congest in this kind of complex minor sideways range configuration since hitting the high on 13th of December. So still using the 70.94 as my short-term pivotal resistance level. A breakdown below yesterday's minor swing low, almost hit last Friday's swing low at 68.81, exposes the West Texas oil to more weakness towards the lower limit of the range at 67.85, followed by 67 figure level. So 67 figure level is in fact the minor swing low of 18th of November and 6th of December. Only a push up above 17.94 will negate the weakness on West Texas Oil, but no signs of a basing formation because it hasn't cleared above 73.15 yet. So only above 70.94 may expose the West Texas Oil to float upwards towards the upper limit of the range. 71.70 in first step, followed by the key medium-term resistance at 73.15, where the prior push-up has failed to make any breakthrough since 24th of October. So that's about 2 months of resistance being 2 months of being resisted at 73.15 level for West Texas Oil. All right, so that also sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's look at the economic calendar for today. So today also will be a rather quiet session over here, 24th of December. So pretty much nothing nothing to take a look out for. So if we head into the holiday season, Japan, the key thing will be on Japan macro data, which is out on Friday, that could impact the FX market due to lower liquidity as well. So on Friday, we do see a slew of key Japan data pertaining towards the health of the Japan economic growth situation and as well as the inflationary trend. 7:30 a.m. you have the job data, unemployment rate, and as well as the leading Tokyo core CPI data that's out on for the month of December. All right, and we also do have retail sales at 7:50 and industrial production at 7:50. So a lot of key macro data pertaining to the health of the economic health of the Japanese economy and as well as inflationary trend. But all that will take action only on Friday, the 27th, early Asia session at 7:30 a.m. to 7:50 a.m. All right, so that sum up today's daily dose of market insight and also sum up the so-called the last daily dose for 2024. So I hope that you guys enjoy the daily dose session so far. Since the start of this year, we've been doing that for close to 12 months. And with that, I wish you all a Merry Christmas and a fabulous 2025. And daily dose will resume again in the new year next year on next Thursday on the 2nd of January 2025. So with that, thank you so much, and I wish you all a fabulous 2025 ahead. Thank you.